Hello and welcome to Business Today Television. I'm Siddharth Zarabi, and with me today on the Q4 results of the company is Amur Lakshminarayanan, the CEO and Managing Director of Tata Communications. Welcome to the show. Can we start with you explaining to our viewers the highlights of the fourth quarter results and what has been the overall financial performance?
Thank you, Siddharth. Thanks for having me on the show. Good to see you. The Q4 has been, and for the whole year, has been a very remarkable year for us in terms of our crossing the 20,000 crore mark is a major milestone for us. Our data revenue crossing the 17,000 crore and hitting the growth numbers that we have hit is truly phenomenal. We're very pleased about it. The other aspect is we have been investing in a lot of areas in the company to strengthen our platform, and we see in our engagement with our enterprises our relevance going up. So that is a key highlight for us. As far as margins are concerned, we are quite happy that the underlying core margins, which is if you take out the M&A related expenses and the consolidation of the two acquisitions that we did, which we knew that were not profitable, and we are turning them around. So if you exclude some of that, exclude the subsidiaries which we have called out before needed to be turned around, the core part of it, we're holding steady at the 23% mark. So that is very pleasing to see. We will be working on obviously all the other aspects of turning around the acquisitions, integrating, driving more profitable growth in the future. But the foundation is being set very solidly.
So you spoke about the future growth. When is that likely to happen with all the acquisitions and the turnaround efforts that you are putting into sort of completely make you profitable?
So from a growth perspective, in the last 2 quarters, we have seen a very good top line growth, and for the overall for the year, posting a 21% growth for the full year has been truly phenomenal. I don't know when in the company we have done this growth in the past several years or a decade or more. So that is truly phenomenal. Our efforts are going to be now to see how with the acquired capabilities and the capabilities that we are building to consistently deliver growth in the teens and high teens, which is in line with our ambition. We called out our ambition to double our revenues last year in the next 3 to 4 years, which means that we have to deliver a growth of anywhere between 15 to 20% in the coming years, and that is what we are going to be working towards.
What will be the key growth drivers going ahead? As I can see, the digital portfolio, for example, has also improved by almost 55+% on a full year basis. What will be the key growth drivers?
So, Siddharth, we describe ourselves as digital fabric, and the digital fabric, we have 4 major elements. So one is the network fabric, and we've been investing in the network fabric to bring new products. Cloud networking is a different beast by itself, and we have been investing in that heavily to make it all more software defined. As our customers move to cloud, they will require more of our cloud networking capabilities, and everything software defined, security on the network, all of them. So the network fabric will be one of the key drivers of growth. The second is the interaction fabric, which we acquired Kaleyra to strengthen our investment before in Digo, which we were doing organically. Now we have acquired Kaleyra. So the whole customer interaction, our hypothesis is B2C customers are interacting with their consumers through multiple channels, through voice, through SMS, through WhatsApp, and a lot of channels that play. Our platform aims to converge all of these and deliver more effective interaction mechanisms and more intelligent interaction mechanisms. That's our interaction fabric, and that will be another growth driver for us. The third fabric is all about the cloud security and the edge. Again, our India private cloud is doing well. The security portfolio with our SOC capabilities is doing very well. we are going to be taking some of these capabilities internationally, and we will drive growth. So that's the third pillar of growth for us. And the fourth is all about the IoT fabric. So the IoT fabric is where our Move platform, all the in-campus capabilities that we deliver for worker safety, smart street lighting, and all of those have been there. That is a smaller portfolio now. That is for the future. I think IoT has been much talked about. I think we will see the growth of that happening in due course. But those are the four fabrics that we have, which together makes a digital fabric for enterprise. And all four of them have good white space available for growth, both in India as well as internationally.
Within the four, what would be the most promising sort of vertical that you have outlined?
I'll be doing a disservice to my teams if I called out a favorite, Siddharth. But today, I think the network fabric, to be fair, is a large portfolio today. And if you looked at last year's results, that has grown by over 30% year on year. That is a combination of, as I said, new products that we have on the internet, new products for cloud networking. It also includes some of the software-defined networking there. We have just launched the entire Wi-Fi 6. So there are a lot of new launches, and that being the largest, that has to shift the needle for us. So that will grow, and clearly that will be one of the key parameters for us to check. The second is the interaction fabric, that sits within our overall collaboration portfolio, and that was somewhat stagnant in the last 3 years, if you had noticed, and within which we launched Digo last year, and that grew phenomenally well. Now that combined with Kalera is another area which we need to grow. We will continue to invest in Kalera. So even though we acquired the company, there are cost synergies to deliver the margins. We will continue to invest in the platform so that we can make that interaction for our customers more intelligent by bringing AI into it, by orchestrating across more channels. So we will continue to invest, but that's another fabric. The interaction fabric will grow in a big way. And as I said, the cloud and security, largely it's been an India-focused growth. We will look at international markets in the coming years. Security and network security has been growing, but that's also got white space. So in terms of size today, the network fabric would be the largest. The cloud and security and the interaction fabric would be similar size. With acquisition, the interaction fabric is bigger than the cloud and security fabric. And the IoT fabric is the youngest kid. So we would want that to grow as well in percentage terms, but they will come from a small base.
Okay, I want to talk about some of your recent partnerships and collaborations, and one of them with one of the hottest companies globally, Nvidia, for AI collaboration. And you are perhaps only one of the only 3 companies in India who have done such partnerships. Expand on that. What's the vision here?
So our vision is to deliver a very sophisticated AI cloud platform in India to ensure that there is data sovereignty, the investments that the government and the companies do in India, the intelligence can remain inside the country, so the models are built and we retain the intelligence. There is excellent potential for how businesses can use AI, and that is only is moving from a hype cycles to people doing actually POCs, and to hit an industrial scale will take more time. But what we are preparing ourselves is to be able to deliver the AI cloud in partnership with Nvidia to ensure that we can give that at the best price performance, because it is complex. There are so many different technologies under the AI cloud in terms of the chipsets used and the platform services that we will have in terms of how companies should look at their data pipeline, how should they train, how should they version manage, and all of that orchestration needs to be done. So we will have our platform there. So those are the areas that we are looking very, very deeply, building our expertise and investing in. So our vision is to make sure that we can be the AI cloud platform for for India enterprises and the government. And there is also opportunity for even international companies to use our AI cloud in India. So our vision is to enable the AI world going forward through our cloud.
You also have a partnership with Microsoft. What's the vision there?
So with Microsoft, we have a deep partnership, especially in the collaboration space. We work with them, and we are going to be the launch partners for them in one of the products and collaboration that is coming up. We have had very long-term relationship in enabling their teams and collaboration worldwide, and we will continue to strengthen that collaboration going forward. And that's largely, and they are a big customers as well as they invest in their own data centers. Our joint venture partner STT benefits, and we benefit through that. We provide a lot of connectivity solutions for them. And we have relationships of both as a customer as well as a partner with Microsoft.
One of the things that strikes me is the Tata Group's recent path, especially in the past 3-4 years, where it's now sort of emerged as one of the strongest players in the overall IT technology digital space. So you have a long history with TCS or with Videsh Sanchar when it was acquired, and now you see other partnerships and intent to do semiconductors. I don't know if you can sort of provide us some glimpse into what's the overall vision at the group level for the overall digital tech, IT, hardware space, because we keep hearing snippets of information, announcements. So try and put it together if you can.
I may not be the best person to answer that for you, but I think the overall, as you point out, the group is emerging as a powerhouse. In the service space, you have very strong players in TCS and Tata Elxsi and Tata Technologies having their own niche areas of expertise in the service provider, service integration space. We have other investments in my own domain. I also chair Nelco, which is in the satellite communications. We have Tata Tele. All of us operate in the world of connecting businesses and to their consumers in the most effective fashion, and we're elevating that play to more of a platform play as opposed to being a utility play of being a connectivity. So that's where our focus has been. And as you know, the group has also invested in Tejas and Sankhya Labs and so on, which is more in the space of delivering the telecommunications OEM, and the vision is to see how we elevate those as one of the strongest players in the world emerging from India in that space. So these are the various plays that we have. Each one of them has the space to operate, and each one of them has the space to grow tremendously.
Absolutely, and I'm reminded of what we used to say and write maybe a decade ago, and we would say salt to software, and now we can say that the Tata Group is from salt to semiconductors as well. But let's come back to your immediate charge and portfolio and try and get a sense of the future outlook, especially with what's happening in the overall digital space globally. There are signs of weakness, and many Indian companies, broadly speaking, are facing the pressure on account of that. So as far as your company is concerned, what is the outlook given the global context?
I think in India market is very well. So we have grown in good double digits in India. Internationally, last year in some select markets, we have grown in a good double-digit fashion. But the outlook, the customers internationally are a bit cautious with that. I think the macro conditions have not been very favorable, as we all know. UK and Europe, I think the caution continues with the economy. US was looking positive until we heard the news about the rates not being considered to decrease, and the inflation being very sticky. What would happen? The geopolitical issues and so on and so forth. So the customers are cautious. I think for me and for Tata Com, the positives to take away from this is we still believe we have room to grow despite these cautious conditions. We are able to talk to customers about this probably is the right timing to prepare themselves for the future, to solidify and strengthen their digital foundation of network, the cloud networking as to how they do, and getting the fabric to a much stronger position and prepare themselves for the growth. Changing the network and changing anything is like touching live wire, especially if they're doing something already. So which is where the caution comes from. But our engagement with customers are increasing, and we hope to convert these conversations into deals in due course. It has been slow for us, and which we called out in the last couple of quarters to say, while the conversations are good, the pipeline is good, the conversions have been slow. And we are preparing ourselves with even more investments in the market and increasing our reach and talking to the customers. That is what we are doing.
One final point before I let you go, and this is a message to your shareholders. We were seeing the stock performance right up till 1 year. What would you say to shareholders? There seems to be a bit of a slack when it comes to the immediate interest in the market, but what would you tell your shareholders?
So I'll firstly thank them for supporting us. Many of them have been with us for a very long time. I believe that the story of the digital fabric is very powerful. It is very unique in the marketplace. I don't think very many people have the portfolio strength. We are in a phase of investment. Without this investment, we would not be able to deliver the growth, which I called out last year. And that investment that we have done organically is what is translating into the cost. And therefore, you see that when I call out our core margin is at 23% is steady, but post-investments, post-acquisitions, the margins have dipped. We do have a plan on how we take it back up to the levels of 23% that we called out in the medium term. So I would say to the investors that we are in a very good place. We have to make these investments. We're preparing ourselves to participate in larger deals in the marketplace. And I am very confident of being able to deliver on our vision that we laid out last year.
Absolutely. And I wish you all the very best for that. Once again, thank you very much for your time with us, for joining us and taking us through the highlights of the most recent quarterly performance. With that, it's a wrap on this conversation. Viewers, we'll be back with more content just after a break. Do stay with us. Bye-bye.
Looking forward, as digital financial services continue to underpin the fabric of the financial